morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, May 29th. Well, limited reaction overnight in the agricultural space on the news that the U.S. Court of International Trade ruled that the Trump administration did not have the authority to impose reciprocal tariffs on a vast majority of our trading partners. The stock market loved it. Right now, the court ruling, along with solid earnings from AI leader NVIDIA, right now point to about a 1 to 1.5% higher open for the S&P 500 and NASDAQ. Ag markets, so now tilting lower. Corn 3 to 4 lower. Bean complex is also flipped to lower levels. Beans right now are down 1 to 2 cents. Meal is unchanged to slightly lower, while bean oil is down about 30 points. Wheat prices are mixed. Chicago and Kansas City steady to 2 lower, while Minneapolis is still maintaining 1 to 2 cent gains. I'm sure there will be legal challenges for the Trump administration, or from the Trump administration, on the court's ruling. However, in the short term, this obviously removes a great deal of leverage from Team Trump's trade negotiators. U.S. weather remains crop-friendly. Healthy rains for the south central plains yesterday. Lighter amounts around the north central and eastern corn belts. Through the upcoming weekend, rains will favor the southeast U.S. Temperatures will gradually warm to above normal readings as we flip the calendar over into June. The next round of rains are forecast to impact the northern plains by early next week, gradually spreading east across the northern Midwest by the middle of next week. Longer range forecasts continue to suggest a warm, wet first 10 days of June. Export sales delayed until tomorrow. The EIA ethanol production report out later this morning. It's expected to show production rebounded last week to roughly 309 million gallons, up from 305 the previous week. This higher level would still be just shy of the weekly amount needed to reach the USDA corn usage forecast of 5.5 billion bushels. July corn has now fallen to its lowest levels in just over a week. Next support is a May low at 436.5. Export demand is starting to seasonally shift towards South America. Recent rains should help boost Brazil's second crop there. Some estimates now are as high as 140 million metric tons for their entire 24-25 crop, well above the USDA's forecast of 130 million metric tons. Funds yesterday did sell about 15,000 contracts of corn, stretching their short position out to 128,000 contracts. Open interest did jump 8,000 contracts as a result. Support for D rests at 435. Two-sided trade overnight for July beans as it hovers near its 100-day moving average. Next support is at the 1036.5 level. Support for NOV comes in at 1032.5. I'm leaning towards slightly higher bean acres than surveyed here in the March 31st prospective plantings report. They came in at 83.5. Inside trade for July bean oil overnight as we await the EPA's RVO mandates. July meal just is now continues to be stuck between $290 and $300 a ton for 5 weeks now. Inside trade all around in the three classes of wheat. Econ this morning, they did raise their Russian export forecast just over 1 million metric tons to 40.8 million metric tons, still well below the USDA's 45 million metric ton estimate. Seasonally, right now, it'll be hard to sustain much of a rally in wheat with winter harvests just around the corner. Funds do remain pretty heavily short across the entire wheat space. Thank you for listening, everyone, and I hope you have a wonderful day.